Hey everyone, happy Sunday evening and welcome to the latest TDR Small Cap Sunday podcast. I'm your host, Shad Dales. Thanks for checking in. Summertime, here we are, but we're diving in deep with our 5 latest companies on stocks you may or may not know and why they're grabbing our interest. Not only my interest, but our lead analyst, Bill McNarland, and lead financial writer, as he does a lot of research every single week to give you information that you want to learn more about. So with that, let's welcome him in. Lead analyst, and like I said, lead financial writer here at TDR, Bill McNarland. Happy Sunday evening. How's it going?
Oh, it's going excellent. I had a great weekend. What about yourself?
Well, it's my daughter played a tournament of baseball. It was rained out on Saturday, so all they had to do today was play 6 games in one day.
Oh, wow.
6 games. So needless to say, the kid's tired, but regardless, here we are. And I know we've had a lot of great feedback as far as some of these companies that we're really diving into, but we highlight 5 new companies that you did a lot of research on pertaining to this week. In addition to, as we said before, highlighting 5 companies, I also want our viewers to pay close attention to this week. We're going to look at how to, do some analysis that you've mentioned to me about investing in an IPO or soon after an IPO is launched. We all know many retail investors, they always want the opportunity to invest in a private placement because they feel that's where a lot of the money is made. And we're going to highlight one company specifically that kind of pertains to that is an MMA company. And obviously has, as we've said before, off camera, Conor McGregor superstar is tied into it. So a list of great companies, and this should be an interesting one, right?
Absolutely. I was really excited to look into this company because I'm interested in M&A. But the second thing is just it was a great place to do some teaching points about how investors can look and analyze an IPO, because it's very different from looking at a stock that you have 3 or 5 years of history online, and so your decision making process is a little bit different.
Yeah. Okay. Well, we'll look to learn from that. In addition to this MMA company, we also want to highlight a mining company as we head back to the mining industry, an outdoor company out of the U.S., an AI company, and finally, our cannabis stock of the week, which is going to feature MSO behemoth Trulieve, which arguably could be the darling company of the entire industry and tremendous short-term growth catalyst for this company. But as we do each week, we highlight 7 specific questions when analyzing our cannabis pick of the week. So we'll run through that exercise again this week and give you our final analysis of this company and initiating coverage this upcoming week as well. So you might want to log on to our QR code at the lower right-hand corner and subscribe to our baked-in newsletter, as we will feature initiating coverage on Trulieve this week. Let's dive into it then this week. But before we do, as mentioned, the TDR Small Cap Podcast, all views on the TDR Small Cap Sunday podcast and the guests on this podcast are purely opinion. You should not treat any opinions expressed or guests as investment advice. The views on this podcast are solely intended to be informational and are not investment advice. All right, let's begin. First company, MMA company. They're called Alta Globa Group, which trades on the New York Stock Exchange under the ticker symbol MMA, currently trading at $3.10. Market cap is 31 million. Shares outstanding are 10.2 million. As I said earlier, this company has ties to Conor McGregor. So, Bill, you want to explain who this company is and how they operate?
Yeah, so the tie to Conor McGregor is John Kavanagh was his head coach.
Okay.
John, along with 2 other co-founders, started this company, and it was an interesting group of individuals. You had one individual, a co-founder that was a finance individual, one person was a tech expert, and then one was an M&A expert. Came
Smart.
together to start a company. To bring, I almost call this MMA tech. It's almost a technology company. They built a global platform that can make a community out of aspiring MMA fighters that can get training, can find different types of coaching, can have a sense of community to find different events or gyms that they want to go to. And they partner with gyms and coaches to be able to collaborate and share revenue in bringing these people together. But they needed the technology. And this is what John Kavanagh thought was missing in this industry. And it has an interesting investor. There's a press release that Conor McGregor has invested in this company.
Interesting, because I know actually when I used to be in this industry, one thing I can say about a lot of people involved in it, they're very loyal, trustworthy, and supportive. So I'm curious to see how this company has kind of grown. But maybe actually or outline a little bit. So you brought up the topic of IPOs off the top. So what should we look at when it comes to asking, I guess, the right questions on whether to should you buy before an IPO or soon after? What are some of the things when you're analyzing that?
Yeah. So So let's talk about this, and then we'll look at this company as an example. So in the IPO process, first of all, management or the board of the directors of the company
Yeah.
have the obligation to get the highest price possible in the IPO for shareholders.
Okay.
When you think of that, that makes sense. They have a trust responsibility. If they're going to dilute the company some, they have to get the highest price. So then, as an investor, um, so you have to look at thinking, okay, is this the price, a good price or not? And it'll vary depending on the IPO, but generally they want to get it at a price that they can fill the initial IPO. So, what's going to happen to the stock after? Well, often we find that with large caps and exciting names that are going IPO, there's a huge spike after
They
they come
move
out.
100%.
But I've never really found that to be true with small caps because small caps don't have the following like when Peloton did their IPO or Beyond Meat.
But
You
can you
know,
say that with the small cap environment? Like I've seen a couple of examples where they brought in some pretty high profile people and the stock has ripped out of the gate. But you find historically, as you said, small caps, they tend to not do that. But it all
yeah.
depends, I guess, if the sector is red hot as well. But continue your thought.
Yeah, and so generally, typically, if there's something that I'm interested in, and usually it's something that's not necessarily well known. I usually wait till after the IPO because I find often that the stocks often fall back because there isn't a huge knowledge about the company that they are public necessarily,
Yeah.
and usually I find that brings me an opportunity to buy at a discounted price, and that's where I get kind of interested. So I was doing that type of analysis, looking at different recent IPOs, and that's when I came across this company and got very intrigued by the story as I did more research.
So, as we all know, and this is something that every retail investor struggles with, a little term called FOMO. So, when it comes to that, and you do see something going public and it is increasing, what do you do in that situation to be patient, calm, and not necessarily jump in, as you said, to it, like, as you're chasing basically a stock? Because that is definitely something a lot of investors, especially in the small and micro cap space, tend to do.
Yeah. Yeah, I agree with you 100%. Step back and just watch. And that's been my philosophy, and it's worked well for me. So, in this situation, the stock IPO'd recently for $5
Yep.
back in the spring, and it's backed off now. So, it's down to $3.10. Now, I think management priced this right because they were able to get the $5 per share to put into treasury. So, that was an excellent decision. But I think the company just hasn't got the following. There's no research and analyst reports that I can find. Um, I don't think there's a large following of the company yet. So I think with more intention, this is a very interesting opportunity, but I just don't think it has the following yet of investors.
Okay, so let's go to the charts and looking at pre-revenue and balance sheet strength. What'd you find?
Yeah, so we'll step back for a moment how we look at this with an IPO. So normally, all the stocks we talk about, we go onto our online systems and we can see the revenue for the last 4 years and all that information. With a company that just went IPO'd, typically that information is not going to be on any of the online systems, and it's
Yeah.
not necessarily relevant because after the IPO event, fresh capital is coming to the company, the balance sheet's going to be different, everything. Um, so you have to do your own kind of analysis. And there's two places you can get information. One, you'll get the prospectus document, which is a legal
Right.
document that's been vetted and approved by the Securities Commission. The second one is you can get the company's financial deck or their investors deck. Now, normally investors decks are not approved. The investors' decks are internally created and improved internally, but not by an external source. But in the IPO process, the investment bank that's leading it approves all the material. They go over it very carefully to make sure there's no liability. So
Okay.
the actual investors' deck on an IPO is very credible. So I went through their investors' deck to get my information about the company, and that's what investors have to do when analyzing an IPO.
Okay. Good to know. When you look at MMA, and I don't think there was anything online to kind of validate this, but currently right now, there's been a lot of rumors that this is the fastest growing sport in the world, and it's definitely global. I think it has been a very popular sport amongst international countries for quite some time. But as you can see, obviously here in North America, I think they fully understand that this is like a mainstream sport that belongs in the same category as like the NBA, the NFL, with the way the UFC has just exploded. But this is now a global sport. So when it comes to building a community, is this something that they're attracting across the world? Whereabouts?
Yeah, so they have in their actual company deck that was approved. They had some interesting sports there. They felt that there were 640 million global fans of UFC, and this aspires people to get involved that want to become athletes, and so they
Yeah.
have training programs to take you from the beginning to becoming where you can compete. And one of the statistics that made sense to me that I looked at was that UFC started in 1993, and no one really knew
No.
about it. But now I think most people know about UFC. So I do, when I look at that, I think, yeah, it makes sense that this would be the fastest growing sport, even though I couldn't find necessarily the statistics to back it up. But just that alone made sense. I know that there's a large community. And this is what these three founders, along with Conor McGregor, thought was needed in the community.
I used to ring announce for an MMA promotion in the UK back when Conor McGregor was part of a promotion called Cage Warriors. So I'm kind of aging myself, but all he's done throughout his MMA career is become the biggest revenue producing MMA superstar ever, and
Yeah.
perhaps a billionaire. But curious to see what kind of network and leverage with his name and branding around that as to what this company will do. So now that you've outlined everything, moment of truth, would you buy or own this stock?
Yeah, because what I looked at, so first of all, I wanted to answer, they're a growing company. So their revenue last year was up 51%, but it's only around $1 million. So I wanted to look, what do they have on their balance sheet to take care of some burn that they have. So
Yeah.
they had to burn about $4 million last year when you look at cash flow. They have $9 million of current assets. Their revenue, if it continues to grow up, and go up, their cash flow losses are going to be less. So I think they have about 4 years to make this project work. I believe in the thesis that is growing. I believe that there needs to be a community, but I like the people involved. You have someone with a strong background in M&A
Tech,
or
coach,
in the sport,
athlete. Yeah.
yeah, and then you also have the finance individual, and you also have the tech expert.
Smart.
So I think that's a great thing. And they have some brand ambassadors too, but the brand ambassadors, when you're making an investment, I look at the management that it's actually making the decisions. I'm not swayed necessarily by the ambassadors. But when I look at that combination, is I like it, how it's kind of a technology company. I would buy this. I'm excited by it.
Yeah. Stick in your lane, do what you do best, and do it really, really well with the four different partners, right?
Yes.
All right. So we got our first green check mark. Alta Global Group, New York Stock Exchange, MMA, and like I said, online tech platform of the MMA industry featuring none other than Conor McGregor, MMA superstar. So we got our first green check mark. All right. Let's head now to our second company of the evening. Head south of the equator and head to Colombia, involving a mining company called Mineros SA. It's located actually in one of the most beautiful places in the world, Medellin, Colombia. Who doesn't love going there? Trades on the TSX under the ticker symbol MSA and on the OTC under the ticker symbol MNSAF. Current stock price is $1.09. Market cap $320 million. Currently outstanding shares is 299 billion. So, Bill, mining, as we know, can be anyone's guess when it comes to working. However, in this case, when looking at this company, in your opinion, this is what happens when mining goes right. You want to explain further?
Yeah, so this is a mature a mining company, even though it's a small cap name.
Yeah.
This is what happens when it works. So a lot of times we look at, sometimes some mining companies are ideas, and then some are working to execute to make an asset better. But this is, they've done this already, and now they're producing gold. And this is a model financially. We can see what happens when a mining idea goes right.
So what is going right? Because they said gold production in Colombia, Nicaragua, exploration in Chile. So what exactly, if you can give some examples, are they doing right?
Yeah, so I think the numbers really tell the story, and we'll go through these a bit in detail. We can see
Okay.
they're producing a lot of gold, and it's at a greater value they're selling it for than what their costs are. But they're doing something very mature as well, is reinvesting in the business and into for new finds so they can continue to produce this type of revenue.
So it's rinse and repeat, it appears right now for their operations, which is why not? And especially when you're in gold. Okay. Something we've actually brought up before. It's a ranking chart when it comes to, I guess, doing business in various countries. And we've talked about this before. Something that I think you've outlined before. I forget the other countries that you did comparison before, but when it comes to South American countries, what can you share with us, say, in comparison to, say, something in the US?
Well, first of all, let's just take a look at the chart. So, on the ranking here of how to do business, including all the different categories,
Yep.
Colombia comes in at 70.1 out of 100. So,
Okay.
the United States is 84. So, Colombia, from my personal experience, is a country that's not that difficult to do business in. It's they've worked very hard to make it easy for foreign investors to come in with a lot of less red tape. So
Yep.
this, first of all, I don't think investors need to be concerned about looking at a gold project in Colombia. It's a country that's not that challenging to do business in.
Okay, so you've already outlined what they're doing right. Anything else that we should look at when analyzing this company?
Well, let's first of all, the big things we have to look at is when a gold mine company is going well, it's because they're producing gold at a lower cost than the price they're selling it for. So this is
Okay.
something to look at in detail. So let's take a look at this chart here. We have a yellow line, a red line, and a green line. So yellow is the cash costs of getting the gold out of the ground. The red is something called all-in sustaining costs. And so it's not just your cost today with a mine. Eventually, you're going to have to replace some machinery or make some improvements. So that red line is the cost that we look at. So we see in the last quarter, their costs were $1,429 per ounce, but their
Okay.
sales price was $2,067. So they had a spread of over $600 an ounce of what they were pulling out of the ground. And they brought out over 50,000 ounces of gold.
Can you give
So that's
maybe like
really interesting.
$600 an ounce?
Yeah. Is there spread over? Yeah.
What would you say is an average mining company? If you were to
Well,
think of any number, go ahead.
this is the thing. It fluctuates all over depending on the country, how
Right.
much cost, how much regulation, how much red tape you're in. But we can see in this jurisdiction, they have a very healthy spread here.
Okay. Balance sheet. What are we seeing?
Oh yeah, this was something fantastic to look at. So the market cap, remember, is 320 million, but the tangible book value, so that's your breakup value of a company, is 329 million. So the company right now is for sale at the price of its assets. So
Hmm.
that's very good. But there's a clue here. Their depreciation was 77 million last year. So that
Okay.
tells you that probably that breakup value is artificially low as well. There's likely more value here that's showing on their finances.
So I wanted to bring up just like, yes, we're looking at numbers, but you wanted to dive a little deep when it comes to their income numbers. Is that what you're alluding to right there?
Yeah, well, let's do that now. We'll look at the result of the spread that they're making. So on our next chart here, again, we see that their market cap's 320 million, their
Yeah.
revenue is 626 million, so it's large. Their gross margin is 31 percent,
Strong.
but there's no SG&A really. It's only 5.4%. You
Wow.
don't have to brand gold. You know, we looked at a company last week called
Last week.
Allbirds. Remember, they had all those costs trying to make their shoes popular. You don't have to worry about doing this with gold.
Take a
And so
picture of
the
it, baby, and it sells.
yeah,
Right? That's
yeah.
it.
So that's why they had an EBITDA of $230 million. So they're
Wow.
but look at that. Their market cap is 320, and their EBITDA was 230 million.
Cash flow situations, what?
Yeah, so the cash flow was amazing as well. They had levered free cash flow of $73 million last year. And so they have money to put back into capital expenditures and
Yep.
also to pay dividends. And that's a very important thing we look at because it's like you don't want to kill the golden goose. You want to keep maintaining it. So they're going out to do additional exploration,
Yep.
increasing their deposits, their spending on this to reinvest in the company. That was very attractive to me as well.
They have a healthy dividend. You said dividend, and it's a healthy one. What is it?
Yeah, their dividend right now is works out to 9.32%. It's 10 cents per share over the course of a year. It's a mix between a regular dividend and a special dividend.
Okay.
But when you look at the price of the spread between gold and their costs, that dividend looks like it potentially could be increasing as well. So it's a very nice opportunity.
I would say this is probably just the way you've outlined this, one of the most interesting companies that we've done since we launched this show. So, how much upside potential do you think this company truthfully has?
Well, I see that they have a lot of room there to push their dividend to increase it
Yeah.
potentially. The second thing there is as well is this is so inexpensive. Eventually, investors are going to be screening and looking for something. You get a high dividend, and you have a company that is trading just for a very low multiple off their earnings.
Yeah.
So it's something so intriguing.
All right. Grab your green marker. Looks like our second check mark. Moment of truth time. Would you own this stock?
Absolutely.
Yeah, 100%. All right, next up, our third company. It is an American outdoor company. It's called American Outdoor Brands. It's located in Missouri, trades the NASDAQ under the ticker symbol AOUT. Current trading price, $12.02. Market cap, 155 million, and shares outstanding pretty low, tight, 12.9 million. So how would you best describe this company's stage of this particular company? Are they in mature stage? Where are they, Bill?
This is a mature company, but they have a significant growth plan. So this is something
Okay.
I find very intriguing. I like to look for a company, even though they're mature and established, they have a good plan for growth.
Okay, so analyzing this company, why is it grabbing your interest? Because I think there's a few comparables that we can do with this, including the San Francisco shoe company that we did last week called Allbirds. So, what are you seeing, and why are you analyzing this?
So first of all, they're into outdoor equipment. So if
Okay,
you're an enthusiast, you want to get a tent or you want to get a grill or you need different things to support your recreation, this is the company that you might want to, you might end up buying something from. Uh, what's interesting, that's established. We know that. But what was intriguing about it is they're spending a lot of money into R&D
okay.
to come up with new patents and new products that are different. And so, in some ways, it's almost like a newer growth company because of the amount that they're spending on research and development to come up with new products for the marketplace.
I'm curious to see how this industry overall has done since COVID. I would think it's actually grown exponentially, but is it highly competitive? Do you know?
Yeah, it is competitive, but what makes this company different is they have 392 patents of things that outdoor individuals need that they invent and then they protect that IP. So it is competitive, but you have to be coming up with better things that are patent worthy to get you out of the competitive landscape.
A story within the story, right? 392 patents, did you say?
Yeah, and that's grown by 30% over the last 3 years. And so
Okay.
this is something that the company is heavily investing in to have R&D to come up with new products.
All right, let's go to the charts. Current balance sheet. What does it look like?
So yeah, so what I want to look at with a growth company or a mature company that's growing is you want to make sure that they can support the investments that they have in their R&D until they come in to turn into higher amounts of revenue. So when I look, they have a market cap of $153 million, but their breakup value is 139. So that's really supportive. We know the assets are there, but the current assets is $149 million leading to working capital of
Wow.
126 million. So
Wow.
you're when you buy this company, it's like you're almost buying it just for its working capital and value. So that really caught my attention.
That's it. You want to walk us through like that stat that you just said. So, what are the key things that you factor in addition to that, and why you think this actually is great value at this current time?
Yeah, one of the first places to look is, if you're buying any type of business, whether private or public, is what do they have for cash in the bank?
Right.
And this company, and we call that working capital instead, because some it won't necessarily be cash; it can be in some other liquid deposits as well. So they have 126 million of liquidity sitting there, which almost matches their market cap.
Yeah.
So it's like you're buying a business just for the cash in the bank. And so
Hmm.
that really catches my eye.
All right. So we looked at that and balance sheet. Let's now jump into revenue. What they report last year and how did their gross profit margin look as well?
Yeah, so there's a two or three stories here. So they had revenue of close to $200 million. Their revenue growth over the last 3 years has been a little bit slower. It's been about 4.5%. They're a mature company, so in order to get that revenue up, they have to have a plan, and we've seen that plan through the spending that they've had on R&D, which we'll talk about in a moment. But let's go back to our example with Allbirds, the shoe company last week. So this company has a gross margin of 44%. That's
Yep.
really good. But their SG&A is 47%.
Allbirds
So
was what last week? Do you remember? Was it
oh
over 90?
yeah, it was extreme. So when you're putting together a new type of tent that has something that's a patent, maybe it's leak proof or such, you don't have to you present to the buyer, this is what it does and this is why it's better. You don't have to come up with hip branding for it as much. And so this is something I'm more intrigued in, instead of something like fashion brands that have to spend so much more on SG&A.
Okay. So their margins are somewhat healthy. Levered free cash flow. What did we learn?
Yeah, so it's almost $12 million last year, but they're reinvesting heavy into the business. $6.5 million investment in the last 12 months in research and development, and 4.3% in capital expenditures.
Okay.
So this is where the revenue growth thesis comes from in the future. They're spending to invent new ideas that they can sell in the marketplace, and also for higher margins.
All right. Moment of truth time. Would you own this stock?
Yeah, I would. I like the idea that they have the SG&A in control compared to when people are trying to make popular brands. The second thing I love for it, it's just so inexpensive compared to the cash in the bank, and they have a thesis for growth. So I would buy this company.
All right. TDR, Small Cap Sunday podcast. I'm your host, Shad Dales, along with TDR lead analyst Bill McNarland. As we're halfway through, we highlighted an MMA company featuring Conor McGregor as a lead investor. It's a company called Alta Global Group, trades on the New York Stock Exchange under the ticker symbol MMA. That has given us the green light, as well as a gold mining company out of Colombia. Perhaps one of the most lucrative stories since we launched this show, Mineros SA, trades on the TSX under the ticker symbol Minera SA under the ticker symbol MSA on the TSX. And then finally, American Outdoor Company based out of Missouri that you've just given the green light as well. Bill, trades on the NASDAQ under the ticker symbol AOUT. So if you're just jumping in right now, glad you could join us as we now jump into the fourth company here this evening. It's an AI venture capital company. They're based out of Vancouver, Canada. Trades on the TSX Venture under the ticker symbol AIVC. Current share price is 22.5 cents. Market cap is 8.3 million and has 32 million outstanding shares. Important to note as well that this company was formerly known as ESG Global Impact Capital. It's a venture capital and private equity and venture debt firm. They invest in consumer products and healthcare, medical devices, nutraceuticals, and nutritional products, all highly competitive industries. So what should we be watching right now when it comes to this company, Bill?
Well, first of all, there's not a lot of AI companies that you can invest in the marketplace. So it's exciting when you come across one. I'm
That is for
always
sure.
searching for them. Yeah. So I was like, wow, this is exciting. There's an AI company. Let's look into it. And I see that people are following it because there's trading getting done every single day, and the stock has been volatile. It's traded between 19 cents and 76 cents. So I said, okay, well, what's going on here? Let's find out about this company. It's exciting to find an AI company.
Yeah. From what I've learned, and I was down at the AI conference in Toronto, Canada a couple of weeks ago called Collision. But what I'm seeing in this space is there's a ton of companies that are private. And basically, once they have really, I think, excellent IP, the big conglomerate AI tech companies come in and just scoop them up. But you're right. There's not a lot of small cap companies within this industry, right?
Yeah,
Yeah.
yeah, that's correct.
Okay. When I look at this company in particular, first question: are there any yellow or red flags pertaining to it?
So first of all, I go to the company's website, and that's where normally the first thing I do is I like to review the investor presentation. That's like management talking to you about what's going on. And so I found with this company, there wasn't an investor presentation on their website. And
Hmm.
sometimes that happens about 30% of the times with companies. So there was nowhere to get that information. So then I started to read press releases. I went to, I see here's an image we'll show here where on the website for the Toronto Stock Exchange, there has been no news updates about this company. The last news they have on file there is 2021. The company's website has one news release saying that they were changing their name. But so then there again, I can't find out what the company does. So the next step then is to look at the financials.
So,
Uh,
yeah, go finish your thought.
Go ahead. Yeah.
Well, I wanted to say, like each week we highlight 5 companies, and one of those we want to make sure, is it a trap or is it on sale? And we want to highlight to people the difference between trap and on sale. But continue on as the chart shows. There were cash flow burn of 100K and a few other important stats that I think will grab your attention, and not necessarily in a positive way.
Yeah. So with this chart here, notice the market cap here again. They have a market cap of $7 million.
Yeah.
So I went to go look at their revenue and earnings. There's nothing there yet. I notice they have a cash flow burn of about $100,000 a year, and they have 1.1 million in assets. Uh, so what you're actually buying here is a company that has not yet expressed its idea of what it's doing.
Hmm.
People are trading it though and buying it. It has a market
Why
cap
would
of
people?
$7 million.
Why do they trade? Just because of volatility involved in it?
I think because it has the name AI.
Yeah,
Like
that's crazy.
here, people are trading an AI company that we can't identify yet what it even does. And we know it has a cash burn of $100,000 a year, and it only has 1.1 million of assets. But yet, people are trading in today paying $7 million for this.
What do you think that says about the current landscape, the investor community of 2024? That they know nothing about the pure business fundamentals of a company, but because they have AI in it and it's a trending, basically, word, they're investing in a company. It's surreal, isn't it?
Yeah, and it's a good lesson for all of us that we when things are hot and moving in industries, we
Yeah.
have to do our research still.
Okay. So cash flow burn of 100K, 1.1 million, you said, of net assets with zero long term assets, correct?
Yes.
Okay.
So
So go on, finish your thought.
what we have to do here is I'm not saying there's anything wrong with this company. Maybe it's going to be really exciting when they share what they're doing,
Yeah.
and that's the time for investors to analyze it or trade it, not now.
And if you are going to trade now, proceed with caution. Again, this is not investment advice, but proceed with caution. All right, moment of truth time. We've got a first red X here this evening.
Yes. And I'm going to clarify again, not today. Maybe this is a company that's going to be a show a year from now that we're really excited about,
Okay.
but we just can't make that decision because we know nothing about it.
Yeah, good point. All right, last company of the evening, and arguably the most lucrative cannabis company in the world. It's multi-state operator behemoth Trulieve, which trades on the CSC under the ticker symbol TRUL and on the OTC under the ticker symbol TCNNF. This company, Bill, needs no introduction. Major cannabis company in the U.S. landscape, operating in 9 different states, including Florida, with I think it's 136 or 137 dispensary locations, making it by far the largest cannabis company in that market. And this could be the largest cannabis market come election night. Right now, it's only a medical state, which is Florida, home to 22 million people and around 120 million tourists every single year, producing around $2 billion. However, if adult use and what's called Amendment 3 passes on November 5th, many speculating that this could become an 8 billion, or I should say 6, between 6 and 8 billions as far as the overall market size. And as I said earlier, 136 dispensary locations, making it 2 times the amount of the second largest company within that state. So when we look at this company, what stands out to you more than anything?
Well, first of all, a comment. So most people are familiar with the company, and it's a large company, but it's a small cap, and that may surprise people. Today, it's a
What,
small cap.
what
Its
what's its
market
current
cap is
market cap?
just under 2 billion.
Huh? Think of
Now
the
we know
upside potential.
the market's been soft on the cannabis side, But the
Yep.
fact that Trulieve is a small cap says something about valuation of the cannabis market.
Yeah, important to highlight too. Florida, they're in Ohio, they're in Pennsylvania. Like these are all states that could, on the near term horizon, like I said, flip to adult use. So you can understand the huge upside potential, the revenue this company is producing, and arguably, one of the most respected CEOs in the industry. By the way, this is a non-paying client. This is all full disclosure. We do not have a position in Trulieve either. We just all know that this company has always been the leading pack of this industry. So let's look at, I know each week we like to look or go through an exercise of 7 specific companies on why we're picking these cannabis picks of the week. So let's begin with our first question, which is revenue growth.
Yeah, so
What did you find?
yeah, the company's done very well over the years. The 3-year CAGR is 30%, and that's in line with its peers. It was slower in the last 12 months, and we know the reason why is because they're being really focused on the potential growth in the Florida market and preparing for that, and that could be a huge revenue event in the future. So that's the something to explains why the revenue has been slightly off in the last year, but over the 3-year period, it's been very, very strong.
Okay, next up, gross margins. What'd you find?
This is where Trulieve is a real leader.
Yeah.
Their gross margin is 53.6%. So
Wow.
they've got to that mature stage. The goal is to get to 50. They're beyond that. They've really trimmed out the excess fat wherever they can in this business.
Third question, leverage and balance sheet. It's a healthy one.
Yeah, this is something where they really stand out. So, first of all, we always look at the current ratio here to see where their liquidity is. It is very strong. They have 5 times as much current assets as they do current liabilities. So they're in a very strong place there. The second chart we look at here too is the total liability compared to the assets. They have less leverage than their peers. All the companies have increased it in the last 12 months, but they still have a less leveraged balance sheet than their peers.
Okay, so fourth question, cash flow. What is their current situation?
This is where the business is completely different than it was 2 years ago. They have 26.4% cash flow margin off their revenue. So if someone spends $1 with them, 26.4% of that went to leverage free cash flow last year. And that grew substantially because they actually the year before had negative free
Yeah,
cash flow,
yeah.
and now it's abundant. So that's
Well,
something that's really changed this year.
yeah, there's a story that you did recently on investing in companies in this or looking at companies in this space that are not dependent on rescheduling. But this is one of these companies in particular that's only going to expand should rescheduling take place and 280E goes away. So next up, levered free cash flow. You want to quick highlight that again?
Yeah, so it's this we're looking at here is the growth in it, and it's been just fantastic for all the large cannabis companies, including Trulieve. And so this is a real theme for the larger companies. Is this is the year that they've shifted into positive cash flow, and cash is king, and the main thing that people should be looking at with these companies.
The evolution of the cannabis space starting to come together when you look at stories and companies like this. Okay, second last question, an important one when it comes to expanding capex. What'd you find?
Yeah, so they've been more conservative. We know that they have the cash flow to be spending on it, but they've spent a lot of their capital expenditures in past years. But in compared to their peers, they're reinvesting less in capital expenditures than their peers. So that's a business decision internally they made. I know they have the cash. We've seen that in the previous slides, but they're not reinvesting as heavy as their peers.
They invested heavily in the early years and look at the position that they're in Florida right now. But yes on 3, hashtag yes on 3. So Kim Rivers, CEO Trulieve, many as you know, she is actually spearheading Smart and Safe to basically draw awareness towards adult use cannabis leading up to the federal election on, I think that's Tuesday, November the 5th. But big opportunity. And speaking of big, what's the final thing I want to ask? The valuation of the company today. What'd you find?
Yeah. So what I do with all these companies is I do 3 different valuations, and I blend them together. I do a discounted cash growth valuation, one on discounted revenue, and then I do EV revenue valuation. The stock closed $9.25 on Friday. and I valued it $15.29. And so you have over a 50% potential upside based on that fair value. That doesn't include necessarily changes in Florida
Yep.
or rescheduling in general,
Yep.
and also clarification on the whole 280E situation. I know Trulieve's been a leader there, but we also had some information came out from the IRS this week as well. So there's more opportunity here than potentially that I put into the valuation of 1529.
So when you look at that 1529, would you say that's a conservative valuation right
That's a
now?
that's a conservative valuation, but it
Okay.
also goes, to say something can go up 50% and it's conservative valuation.
I know.
That just goes back though to where we are in the cannabis market and the fact that Trulieve it qualifies to be on Small Cap Sunday.
I know. Can you see these investors now? What? You don't think it's $40? Anyway, all right. Recapping 5 companies. Let's bring those up, Arns. All right. We've got Alta Group, which is, again, affiliated with Conor McGregor on the New York Stock Exchange under the ticker symbol MMA. Mineros SA, good gold company, out of mining company, I should say, out of Colombia, trades the TSX under MSA, the ticker symbol MSA. An American outdoor company, trades on the NASDAQ under the ticker symbol AOUT. That is your third check mark. Your first X was an AI venture capital company that's actually just trading on the term AI with no real revenue. So please proceed with caution. This is a trap. Trades of the TSX venture under the ticker symbol AIVC. And then finally, multi-state operator behemoth Trulieve. Last question after valuation. Is this a stock that you would own, Bill?
I would. I think it's a good entry point. On Thursday, it was a mid cap. On Friday, it's a small cap. So it was. It had the markets pulled back, and I think you want to personally for cannabis, I want to own a collection of MSOs and just pick the ones that are the strongest, and this would be in that category.
That's great. You think we should enroll in some of these online courses with what Alta Globa Group is doing? What are we, late 40s, buddy?
Well, I think actually, I was looking at they represent that there's something we could do in a couple years of effort. We could transform ourselves.
You see this gray?
Before we're 50,
I know,
maybe
right?
we could be M&A, be in a competition before our 50th birthday.
Yeah. I remember one of the legendary fighters, Randy Couture. Man, that guy was 42, 43, 44 years old and still fighting. I'm just like, the commitment and dedication at that age, it's crazy. But I work out 3-4 times a week. And when I do my legs with my trainer, oh my God, 2-3 days, like I feel like I'm 90. Got to stretch, but this is what it's all about and building community. But all great companies this week. So what do you guys think? Any feedback? You like the stories that basically we've unfolded here today? Do you like the companies? Anything more? I know a lot of you guys want more cannabis. We feature that during the week, during our Trade to Black podcast. We still highlight our cannabis pick of the week, but these are small cap and micro cap companies that we want to bring to you that you're unaware of that have big upside potential. So thank this man, Bill McNarland, all the research that he does. So leave a like below, leave some comments below, and let us know what you thought. Bill, enjoy the rest of your long weekend up in Canada. Tomorrow is Canada Day, July 1st, along with Independence Day coming up on Thursday, January the 4th in the U.S. So it should be an interesting week as some of the markets are going to be closed in certain days. But regardless, great work this week, and we'll see you next Sunday.
Yeah, look forward to it. Take care.
All right. Thank you. Hey, everyone. Thanks again for watching. Hey, we're humming along, and it's all because of you and the audience and community that we're building. So, again, make sure to smash on that like button and leave lots of comments. Who do we have up next? You let us know. Who should we interview? What companies? Is there anything you like? Is there anything we're missing? We're all here for you. Let's get on with each other and build this community for all of us to benefit. As usual, don't forget to subscribe to our channel because in the end, we wouldn't be here without you. Thanks again, everyone.